Good morning to you on this beautiful Friday. The market is turning bullish and bullisher, and I want you to understand why and how that works. A couple of things happening here: valuations, Fed, general bull run, massive options expiration. What the heck does that mean? We've got, I just saw $100 million options buy on one of our favorite stocks. I'll show you that trade as well from the dark pools, and a ton more data to make you the best informed investor out there. That's always my ambition here. Our mission is very simple. I want to make 1 million of you financially free, help you get on that path so you can enjoy your day and, sip cups of teas or whatever it is you like to do with your day. Smash the you-know-what, and let me share my screen with you so you can see exactly what we're looking at here. Bit of a complex chart, but I think you can handle it. You can handle the truth. Can you? Well, let me get a little pen here and I'll explain it to you. The blue line that's on here, which is a little bit hard to see, and I'm just going to connect the dots here. So we had, that blue line is the S&P 500 forward PE ratio. So how expensive are stocks compared to what we expect next year's profits to be? Why do we look at next year's profits? Because that's basically what the market does. The market doesn't really care what happened yesterday. The market cares about the following year. And in 2000, we had this pretty lofty high. In 2021, we had that high there. That was 2021. And right now, right here, right now, we're there. That's now. So we're high, but we're not like insanely high, which is kind of a good place to be. So the market's basically saying, and all the banks are coming out and going, melt up. Everything is going to go up no matter what you want. And let's move on here. This is, I think, from Yardeni, one of those research outlets here. He's saying we've been using a forward PE, so price over earnings, price over profit, of 21 to get to our year-end 22 S&P 500 targets. This year, 5,800. Next year, 6,300. 6,800 for the year after. And in the melt-up scenario, which is what we are possibly about to enter, the S&P could soar above 6,000 by the end of this year. So everyone's becoming bullish. Now, what melts us up? Rate cuts. Big rate cuts when you're already at all-time highs. That might do the trick. And might say that's maybe part of the reason why we're making money. I would actually argue that it would be easier for us to make money if the market went down. But that's another story for another day. We are, however, this is our little teaching portfolio, which is up $28,000. $28,000 so far. It's a $30,000 teaching portfolio. So we've basically turned $30,000 into $58,000 so far this year. If you want to learn how we make that magic happen, or maybe you don't believe me, which is also completely fine. It's good to be a skeptic sometimes. Come and join me next week. I'm running a first ever 2-day live trading challenge. This is for beginners. You don't need to know a thing. I'll teach you our simple rules, how it works, when we enter, how we automate profit taking and risk management and so on. And you can pummel me with all those hard questions you've always wanted to pummel me with. So come and join me over there at felixprehn.org/challenge on Tuesday and Wednesday at 8 p.m. Eastern time. Now, the Fed has cut at all-time market highs before. This isn't a new scenario. They've done it 20 times so far. They did it, let me get a green pen to match the little green dots on this chart here. They did it in the 1980s, they did it there, they did it here and there, and they did it in the 90s a couple of times, actually. They did it in the late 1990s, and then they did it in 2019, and they've just done it again, right? Whoops, I did it again, as Brittany would say. And what happened a year later? A year later, the market was higher 20 out of 20 times. So historically, there's a 20 out of 20 chance that the market will be up in a year. Now, of course, past performance and all that, But Drew, thank you very much for smashing that like button. There are 100 of you who have found the like button so far. The other 400 are still a bit, foggy or hungover or something, and they can't find the bloody thing. You'll get there, my friends. And another reason to be bullish right here, right now, is when do we get most of our gains in the market? Hint, yes, it is Q4. Q4, the fourth quarter of the year. Q3 is usually pretty horrible. Q2 is great. Q1 is kind of like, nah. But Q4 is usually extraordinary. And seasonality, I think it's got a lot to do with that. That's just the way it works. Historically, that's always been the case. Doesn't mean it has to happen every year, but by and large, Q4 is very, very good. Now, we might get a little bit of a dodgy October, presidential elections and all of that, but November, December should, if history is a judge, take us to the moon. Paul, no hangover over there. Brilliant. I already had 5 this morning. What did you have? Shots of vodka or something. Now, some of you are mentioning the, I think is it quadruple witching day? I think it is. Quadruple witching day. And it is not a day where witches get burnt. No, no, no. The Catholic Church has burnt them all already. There are none left, apparently. Quadruple witching, you know, they did that for like 200 years or something. It wasn't like a blip. It wasn't like, let's pick up all the sort of healers and women with wisdom and burn them. And after a year, they thought that was a bad idea, right? No, no, they did that for like centuries. Really pretty odd what we come up with, isn't it? $4.5 trillion in options expire today, and fairly meaningless, isn't it, to most people? Smash the ad. You're still getting ads? It's so irritating. I don't know why you're getting ads. You don't get a hangover till you stop drinking. Oh, I love that. Okay, to put it simply, at the moment, the way the options market is positioned, it is supportive. It is basically, as the market goes up, they force stock buying. It's got something to do with market makers. It's a little bit complex, but we've got 3 market makers on our coaching team, so I've got a fairly good insight into what they actually do. And in my humble opinion, this looks likely to continue into next week, and that is good news. If you just came here for the simple, remember good, okay? It's not bad, it's good. So this options expiration today isn't some nightmare. No, it's actually probably quite a good outcome here. Now, it's so weird that you guys get ads because I've turned them off, but you're still getting them, which is kind of irritating. I don't know what YouTube's doing. They're obviously they're creaming it of this live stream. Now, I would look pretty hard for some bad news because I always think there must be a but in there somewhere, right? A large round but. And guess what? I found one. I found one, and I think it's interesting and I think it's useful. And then we're going to look at some of the biggest trades of the day and everything else. Oh, Neil, your 22-year-old cat has just passed away. Oh man, my heart goes out to you. It's heartbreaking, isn't it? My kitty passed away now, I think 12 days ago, and it's just the same, really. It's heartbreaking. It really is. It's horrible. You just miss them so much. They're such lovely little creatures. So yeah, very sorry to hear that, Neil. I hope you'll be all right. Now back to the bad news. Life, unfortunately, well, maybe fortunately, life continues. I think that's just the lesson from it. But also the lesson from it, I think, is life's short. Life's shorter than you think. 22 years sounds like a very, very long time. But it feels quite short, right? So really, you just got to enjoy every day. And I think for me, that was kind of, I mean, I already enjoy life pretty much every day. But the wake-up call was kind of like, you got to enjoy life even more today and tomorrow. And that means you got to be able to do whatever you want to do. So freedom, my friends, is what we all need to get there. So FedEx, disaster earnings. They missed revenue. They missed earnings per share. They missed operating income. They missed the margin. Everything was a freaking disaster. And why? They're saying softer demand, which means less demand for package deliveries, which is kind of what they do. And the implication might therefore be possibly, I was going to write a big R, recession fears. Because when lots going on in the economy, when you're ordering lots of stuff, well, shouldn't FedEx get more parcels, or is Amazon doing everything themselves with little robots or something? So yeah, something to watch out for. These are real world companies, right? They actually move stuff. When they move less stuff, it's kind of an early warning signal. So watch that story. Now you might be wondering, how long is the rally going to last? And what should I be looking at for that? And I thought I'd give you an answer on that today. And this is it. This, my friends, is the Mag 7, the Magnificent 7, the biggest top 7 tech stocks. There's actually a ticker for it. There's a bunch of ETFs that track it. This one's called MAGS, but I'm sure you can find some other ones. And then what I've done in my infinite wisdom, that's the stuff they teach you as a banker. Draw a straight line. That line, if it connects at least 3 points, you got yourself a trend, right? So we got this upward trend. As long as we stay above that upward trend, everything is good. Everything is fine. Christmas is going to be here. Santa is going to bring us lots of gifts and all of that. You break below it and you better run, right? So watch for the Mag 7. Seriously, that's what carries the market. So that's one thing I'd maybe have a glance at every few days or so. Now, the Mag 7 are very different businesses. So I thought I'd put out the margins here of each of them, operating margins, because that tells you a lot about kind of their moat and maybe also their vulnerabilities. So Tesla has very low margins, right? Now, I actually think that much like Amazon, that those are both still startups. Sounds weird, but I think they're both still startups. They're still in startup mode where they're just building and spending and investing and they don't really care about margins or profits yet. I think those are going to go up. I actually see that as an opportunity. So I like Amazon. I like Tesla. I think Apple has stalled. I think they don't know what the hell to do. So I'm not really a big fan of Apple here. And the other companies have just established this amazing moat, certainly Microsoft to Google, to Alphabet, who are just kind of stable and growing and generating more cash than they know what to do with. And then the outlier, of course, is NVIDIA with this insane margin. And I think they'll keep that for a while. By a while, I'm kind of thinking 2 years, but I don't know if beyond that they'll be able to maintain that margin. It would be highly unusual for a company to have margins that high at that scale for that long. So there is a chance that in maybe 2 years or something, those margins will come down more to, say, the Microsoft level of sort of 43% or something like that, which will at that point then, depress the stock price somewhat. But that doesn't mean they can't grow. Think about it. If you're selling something at a 60% margin, brilliant. But would you sell an extra unit at a 40% margin? Of course you would, right? You're still making money. So it's not the end of the world, but it's just, again, something to keep an eye on. So NVIDIA at the moment, and here's a little chart for you, which I shall explain. NVIDIA at the moment seems to be lagging the market. So in yellow here, I've got the S&P 500. And then in that sort of green and red ziggity-zaggity line there, we've got NVDA. And as you can see, there is a gap here. And the thought process, therefore, is maybe the gap should get filled and NVIDIA should go up to about $140 to keep up with the market. So I think that's a possibility that they might actually catch up. Because you might think, oh, NVIDIA is so expensive, crazy, right? On what metric? This is ultimately the fundamental valuation of stocks. Forward earnings per share, which is why we kind of started with that today. And guess what? They're moving in tandem, right? They're moving together. The share price in blue and forward earnings per share here are moving together. And therefore, the stock is, on this metric, not overvalued. It's actually cheaper than it's been a lot of the time. So as long as they keep delivering on the profits, NVIDIA is not expensive at $120 odd. Right. Just my perspective here. So Tesla bulls, my friends, I actually just tweeted this because I was quite excited by this. So we have in Trade Vision, which you can get yourself a trial to actually, that 1 month free trial is disappearing today or tomorrow. So if you want to get yourself that 1 month trial still, go to tradevision.io. It'll disappear and it'll become 7 days. So maybe you want to grab yourself that before it disappears. And you can see in there what we call smart money trades, which are essentially dark pool trades. These are institutional trades, so they want to hide from the likes of you and me, but we pay for the data so we get access to it. And we're seeing here call options being bought. These are the 3 largest transactions from yesterday. literally 18 hours ago. And look at the size of this thing. 100 million, 76 million, 40 million. That's just 3 transactions worth, 200 something million dollars of people buying call options on Tesla. Kind of interesting, isn't it? And if you look at the Tesla chart, here she is. We have broken out of the kind of long-term downtrend, that one here. We've kind of outdone the short-term downtrend, and we now seem to be trending up very, very nicely. Broke through the 50-day moving average line, took out the recent resistance yesterday, so that looks pretty good. We got to take out the 260 here. That's going to be some resistance here. And could maybe put in a few more lines here just to make the chart a little bit more confusing. Basically connect, well, something like that. Maybe we take the previous one into something like that. Right. So 250, 260, take that out. And then you basically go above here. Eventually 300 will be hard to get over. You do that and you're back to nirvana, and we would make a lot of money if that happened. We've got a little Tesla trade open here in our teaching portfolio, up $800 so far. And if that moves a bit higher, that would move a lot higher. It would make us quite a few $1,000s, which would be nice. So yeah, that's something definitely to keep an eye on. I'm becoming more and more of a Tesla bull, as you might have noticed. Bit of a long-term story, but for the patient and so on. Obviously, there's risk in it. But it's stuff like that that helps us make money, and money we've made so far this year. We're up 93% so far this year on our teaching portfolio. 93%. If you want to learn how we do that, then come and join me on Tuesday and Wednesday. I'm running a 2-day beginner trading challenge where I will literally break down our 3-step concept for you. I'll teach you what trade to enter and when, and how to automate the profit taking and the risk management so you can chill and relax and enjoy your life. So come and join me on Tuesday, 8 p.m. Eastern time, and Wednesday, felixprehn.org/challenge. We will run out of seats. We can take 1,000 people, and I'm very confident that we will fill those probably by tomorrow. So come and sign up early and be on time, my friend. Now, anything else? Apparently not. Shall we end it there? Let's have a look at the pre-market here. Nike indeed has a new CEO. Thank you there, MVP. You're quite right, which has the stock, well, I was going to say flying, but recovering from its deathbed, I think would be more appropriate, perhaps. So yes, positive. Anything is better than what they have been doing, but the stock is still it's still a falling knife. So be a little cautious and careful there. That's the way I would look at that with Nike. But yes, it's good news that they are replacing the Muppet who's been running that thing into the ground. Google's up, fat drugs are up. Everything else is pretty much flat. NVIDIA, Apple, Microsoft, Meta, all kind of flattish. People just trying to understand, where is this going to go? What's going on here? Do we have recession fears? And I think just a little bit of a breather after yesterday's crazy rally is expected. Huge options expiration today, so it'll be a bit volatile. But I think overall, feeling pretty optimistic here. Lily, you can't trade SPY in the UK or in Europe. You can trade options on SPY, but not SPY itself. Some weird European regulation that the Brits haven't got rid of yet. Palantir down pre-market. Well, I think it's just because it went up a lot yesterday, wouldn't you say? Isn't that it, really? So, it's gone up a lot. So I think being down to the previous day's range doesn't really matter. The deal you're referring to is that $100 million Department of Defense thingy, right? Which is in itself not massively significant, but it's more that they are becoming more and more the ecosystem, the operating system for the DoD. I'm impressed that $200 million in options were buy calls. Very expensive with IV of 94. Not really. I think the IV is quite low, my friend. I think you're looking at IV, not IV %. And that is an easy thing to confuse. Let me have a look. Because iBots... Oh, no, you're right. You're right. Apologies. You're completely correct. Completely correct. That IV is 94%. So yeah, call options are super expensive. I guess they're just bullish. As simple as that. The chart pattern is bullish, so I get it. I get it. Here we got that 265 resistance in there. For market positioning, 250 will also be a bit of a tough nut to crack. But we just got to hope the robo thing will deliver. Tyler, you're very kind. David, appreciate the like smashing there. Guinea pigs, if you had to bet, would you still predict a decent bumpy period? I still think it'll be bumpy just because of the election. But, I mean, what more could you want than a big rate cut, right? So as long as the economic data doesn't give us shocks, if we get some big misses on jobs or something like that, then yes, that will give us a big jolt and everything will go down a little bit. But, I mean, Powell has given us a massive rate cut at all-time highs with an economy allegedly in good shape. And I say allegedly because I don't believe US government data. Not for a minute, but there we are. Can you explain IV and IV percent? So what we show here in Trade Vision is IV percent. That's the only number I'd look at. That shows you how volatile is the stock right now compared to where it was the previous 12 months. Whereas IV is just how volatile is it, but not relative to what it usually does. And that's just kind of the important stuff. Luke Boy, appreciate you. Thank you very much. The options expire today, mostly 4 p.m. Does the market go up much after an election result? Yeah. Yeah, and I think we had a chart for that yesterday. Hang on. Let me see if I can... What's going on here, Microsoft? Bloody pop-up, always. I think that's it. No, that was the rate cut. Hang on. Chart, I think I deleted it. But yeah, basically the market goes up after presidential elections. That's sort of it in a nutshell. November, December just being traditionally very, very good months for the market. Alex Karp sold 58% of the shares. I don't think it was quite that much. I think it was about $300 million. I think the chap owns a little bit more than that. But SEC Form 4, what's that website? Here we go. PLTR. Here we go. So where is that sale? Here, Alex Karp. He sold 325 million. He still owns 716 million. So how much did he own before that? See, he usually owns, you see that here, sort of 250 million, 300 million, 150 million. He obviously got a whopping amount of share options vested here, right? 450 million jump up. So he sold some of those, but he still owns a whopping amount of shares there, right? So I don't think this is particularly a concern. It's more like, you know, the usual tax selling, right? That you see here that every insider does. So I don't think it's anything. People sell for all sorts of reasons. It's when they buy that's actually what's useful. I think he sold 9 million shares, my friend. I think he sold 9 million shares. Yeah, shares traded 9 million, shares owned 716 million. So you make of that as you wish, but I don't think we can actually look at the real filing here. So he sold, yeah. I think that's he's got to convert some of these shares so that they can be sold. And then does it say in here how many he has got left? Yeah, how many he's got left here? You see 140, 200 million, 250 million, 300, 400. Yeah, so he still owns 700 million shares of Palantir. So I don't think it's really a particular concern that he's selling 9 million. Raf, how do we evaluate Trends AI in Trade Vision? So yeah, we're going to keep putting out better versions. In our opinion, version the A0 is better. That's kind of our opinion. That's a buy-only indicator. But say on Tesla, if you used our indicator, you would have made 81%. If you'd done buy and hold, you would have lost 44%. So we like it. It'll make you trade less. Not that I'm saying you should trade it, but as an indicator, use it. I think it performs better. And that's always our goal. And we'll have more and more updates on that over time. We can keep making it better. The AI also learns, so it gets better every day. So I would generally look at the most recent version that we put out, but obviously, Titus, you're very kind. I appreciate that. Hukinlam, you say that the challenge is already full. No, it's not, my friend. You just got to select that you want to sign up to all sessions. That's important. So let me show you that. So select date here. You can't select the date because it's a 2-day event. Software is a bit stupid, but that's the way it works. So you got to click register to all dates. If you do that, you can sign up, right? You can't select an individual date. So you got to sign up to all. I hope you show up to both dates. Obviously, not that I can force you, but I'd like to. Mike, Michelle, okay, trade vision is only 7 days already. Missed it. All right, there we are. SOFI heavily shorted again. That's a good question. SOFI. Let's have a quick look. Shorted 18% or so at the moment, which is it's quite a lot. If you look at some of these previous ones here, 19%, 28%, 26%. So a little moderate. I imagine the rally we've had has shaken out a few people. That's kind of what I would imagine would happen there. I think very nice breakout here. If you now see these 3 highs, right? Each one's higher than the previous. So that's quite nice. So what do we need to take out? I'd have a look in tradevision.io, which is links down below, and have a look at where the market's positioned, because I think that's always quite useful. If you want to find the link, there it is, tradevision.io. And the resistance zone here for, well, let's forget about this week. Look at next week, really, is around 850. So 850 is kind of the tough nut that we need to crack through. And we've been struggling with that a little bit here the last 2 days. So you break out through that. I think then you are going into, the 950 territory, and then up here you go to 1050. That's sort of the way I look at that. So I am bullish SOFI right now. We have a leap call option open on that one. Obviously not a recommendation. How long do you spend reading a business's 10K? I don't particularly read them very often, to be honest with you. I think it depends on what you're looking for. Like I spend most of my time being a trader, and for the long-term stocks, I just look at a bunch of very simple metrics like gross margins, ROCE, our earnings per share improving, that kind of thing. And is the business, is it a great business, which gross margin basically tells you. So I don't really spend a heck of a lot of time reading those reports. I think it's a bit of a waste of time, really. Ding, ding, ding. Is the market open? Oh, dear. All right, let's have a quick look then. Here is SOFI. It's down 0.5 point. Doesn't really matter. Palantir is down 1.5 points. Again, I don't think that really matters in the scheme of things, of the rally. And look, we're bouncing back up already. Tesla is down 0.7%. Again, recovering here. I don't think it really matters. These are small moves. NVDA also flat, down 0.5 point. Apple actually in the green, bizarrely. That's good. Meta is up ever so slightly, basically flat. Google is up 0.7%. Amazon, the big 7, that's really what we're looking at here, is up. So overall, that looks pretty decent. QQQ is flat. SPY is down 0.5 point, nothing particularly dramatic after yesterday's rally. Fucking lump, appreciate that. See you on Tuesday. And yeah, anything else you want us to look at? Anything else we set up yesterday? We did set up a bunch of trades on, big tech, Tesla, PayPal, SOFI, XPI, and today might be a bit of a wobble, but I think overall we're looking pretty sweet. If you look at the way the market's positioned, and I'll give you a quick recap on that if you've just tuned in. Basically, the market is cheaper than it was at the top of 2021, certainly a lot cheaper than what it was at the top of 2000. There are expectations that companies are going to get a lot more efficient and a lot more profitable because of AI, which is important. We're making money. We're up $28,000 on a $30,000 teaching portfolio. That's a 93% gain so far this year. If you want to learn how we do that, come and join me on Tuesday. I'm running a free 2-day beginner challenge. I think the first one we've done in that format. felixprehn.org/challenge. That's Tuesday and Wednesday, 8 p.m. Eastern time. If you want to sign up over there, you go here. Very important, you click on register to all dates. You can't select the actual dates. It won't let you. And then you can sign up. And I'll see you over there. It's completely free of charge. And just take a step back. When the Fed has cut interest rates at the top of the market, as it has done it's done that 20 times already in history. A year later, the market was up 20 out of 20 times. So fairly good indicator of what we expect to happen. The fourth quarter, which we are about to enter, is by far the best quarter of the year historically. So again, reasons to be somewhat optimistic for the end of the year. The whole quadruple witching thing today that people are talking about, massive options expiration. I think at the moment, the market's supportive. It helps us go up, basically, the whole options market. That's likely to continue into next week. So I don't see any real problem there. FedEx had some disastrous earnings today. Something to watch. Watch for the big misses in big earnings and also economic data coming out. That's really the only risk here. But at the moment, the Mag 7 stocks are flying. They continue to fly, which is all we need. Their margins are looking amazing. NVDA might catch up with the market, which gives us another maybe $20 or so on that share price. And NVIDIA isn't expensive by its historic standards. If you look at forward earnings per share, we're actually trailing that trend. So that looks pretty good. And people are getting bullish. $100 million call options bought, just one trade on Tesla yesterday in the dark pools. And you can get that data if you want in TradeVision. There's a link, here we go, tradevision.io. And then you can see that yourself, literally live on what's going on over there. And keep making money. Learn how we make money. Learn the rules. There's a system to it. There's a strategy to it. You don't have to try and figure it out in the dark basement. There are some bankers who've done that for you. We share it with you if you care to learn. Come and join me, felixprehn.org/challenge over the year. And RJ said 3 days ago, you said this week is the worst week of the year. Yeah, well, I didn't expect the Fed to cut rates at 50 basis points, right? That's like throwing petroleum on the fire that's about to go out, right? So what does that mean? Well, it lifts valuations. It makes borrowing cheaper. It makes consumer spending higher. It makes investments better. And we're expecting another, 0.7% cut till year end or something like that, another percent at least next year. So there's a lot of reasons to be a lot more optimistic, and that makes a big difference. A 50-point cut on a growth stock should give you an extra 5% in valuation, and it kicks off the momentum and the trend, and the market is emotion-led. So you go up 5%, you tend to overdo the whole thing. So it's definitely the one thing that'll offset the general September-October misery that we would have expected otherwise going into the elections. And unless we get some horrible economic data in, we're looking pretty good right now, right? Pretty good right now. So you got to always go with the flow. Right? You're never going to be, but I'm right on this. That's not really the way the market works. You just got to adjust it to whatever the chart tells you. Whatever the chart's always right. And we are often wrong, and that's okay. We just have to have good risk management. That's how we make money, right? So when we take these little dips here, right? You see that little bit of risk management there? We lost a little bit of money. That's what allows us to make the big money. You see here, the little dip. We lost a bit of money there, took out some bad trades, and then boom, right? Same here. Boom, you get the idea. So literally being wrong and dealing with it is what makes us a lot of money. So coming live next week, felixprehn.org/challenge for 2 days, live for free. And I thank you for watching. I thank you for tuning in. I hope to see you on Monday. I will do a bit of a recap tomorrow of the way I see the land and what stocks and what the charts are saying and so on. And I'll put that out tomorrow if you care to see it.